I'm Kieran from Crypto, and today I've got some sweet news that hopefully you will like. So let's cut to the chase and jump in. So first of all, Coinbase's crypto debit card arrives in the European Union, and I'm really hyped about this. I been looking for a crypto credit card which I can spend my cryptocurrency in stores and so on for a very long time. So I'm very happy that this is happening, especially here in Europe. So on Wednesday, the June 12th, Coinbase announced that its crypto Visa card, the Coinbase card, which it launched in the United Kingdom last month, is now available in 6 other European countries: Spain, Germany, France, Italy, Ireland, and the Netherlands. Unfortunately, Switzerland's still not there, but hopefully soon. So appropriately enough, the new Coinbase card was announced on the same day that Coinbase's previous attempt at a crypto to fiat Visa debit card, the Shift card, which was only for US customers, stopped working since that program has been retired, which is unfortunate, but hopefully something new will come up. So here are the most important things that you need to know. The Coinbase card was launched on April 11th for UK customers only, but Coinbase did promise to support other European countries in the coming months. Hopefully Switzerland is also going to be part of the list. This is apparently the first debit card to link directly with a major cryptocurrency exchange in the EU. To apply for the Coinbase card, Coinbase customers need to download the Coinbase card app from the iOS store or the Android Play Store, and you then need to sign in using your Coinbase accounts and credentials. After a Coinbase card has been requested, you'll be joining a waitlist. Coinbase blog says that after the waitlist closed, your crypto balance held on Coinbase will be immediately available to use through the app in the in-app virtual card and the contactless Coinbase card. Some other important information: when you wish to use your Coinbase card to pay for something or to get a cash withdrawal from an ATM, you need to use the Coinbase card app to select which crypto wallet in your Coinbase.com account is to be used for that transaction, at which point Coinbase will perform an automatic conversion from that cryptocurrency to fiat. For domestic, within your home country purchases, the crypto liquidation fee is 2.4% of the transaction amount. And for domestic purchase transactions, there is no fee. However, for inter-EEA transactions and international purchase transactions, the fee are 0.2 and 3% of the value of the point of sale transaction respectively. So one thing to note here is that it's definitely a bit more expensive than traditional credit cards. Normally those like Visa cards, the one that I've got, I pay around 1.5% in fees per transaction. So this is nearly double that amount depending on which kind of transaction you're doing, but you've got the benefit that you can pay with cryptocurrency, and that's something that many people are looking forward to. So you can buy groceries with Bitcoin and then coffee with Litecoin right after work or whatever. So I think this is actually a very good news. Happy about this card being available. Looking forward to being available in Switzerland, and I'll definitely get it. Yeah. Now another news. It's a bit talking about worse news, and that's bad news for Ripple and as Visa enters cross-border payment market. So Visa is continuing its growth in the blockchain space. So Visa has launched a blockchain-based platform for cross-border payments between financial institutions, and this sees it enter the increasingly crowded marketplace that Ripple has been trying to carve for itself. So interesting, but competition is good. That will push growth. And it's also nice to see that credit card suppliers and payment processors are positive about blockchain technology. In my opinion, the more people enter the market, the more growth there is, the more competition there is, and less centralized different exchanges are. So payment processing giant Visa launched a business-to-business platform to enhance the efficiency of cross-border transactions for smaller financial institutions. So traditionally, smaller institutions have had to rely on the services of larger intermediary banks, causing potential delays and high fees. So Visa B2B Connect at its code is built on the Hyperledger Fabric blockchain software from IBM and Linux. The company developed a blockchain-based solution to increase the transparency and traceability, although obviously the platform is not decentralized. That's clear because it's a B2B platform, and businesses are not mainly looking for a blockchain platform that is decentralized. They want a contact person for that service. So of course it's not decentralized. So B2B Connect facilitates direct bank connections with payment fees indicated up front. It currently has 30 payment corridors, but plans to increase this by 90 by the end of the year. Visa says B2B Connect transactions will settle quicker in 1 or 2 days. Now, of course, I think here you have to look at what you're comparing it. In my opinion, it's a bit of a joke if you compare it to other blockchain solutions where the transaction speeds are much faster, but it would be quite interesting to see why it actually takes such a long time. Is it because of bureaucratics that they have to have paperwork filled, or I'm not so sure, because in my opinion 1 or 2 days, I'm not 100% sure how fast business transactions are, but I'm not I'm not impressed with this 2-day delay for their solution. So let's see if they actually do have a competitive advantage compared to XRP with this massive delay of 2 days. So as we just found out, it's not so swift after all. Perhaps someone should have a word with Visa about those speed estimates. While 1 or 2 days may be quicker than the original SWIFT system, this has already been superseded by GPI. SWIFT introduced the Global Payments Initiative back in 2017, which processes the majority of payments within 24 hours. So even SWIFT is looking to further improve GPI with blockchain technology, announcing a partnership with Ripple competitor R3 back in January. So we said it, XRP, Ripple. Of course, Ripple and its should be feeling very pleased with itself. After all, imitation is the sincerest form of flattery, and it has been finding itself flattered rather a lot lately. So with its real-time global transaction platform, Ripple has likely little to fear from these newcomers in its market space in terms of speed, and Swift's almost unbelievably high 6% failure rate has long been one of Ripple's key marketing strategies. So Visa's brand and reach could be a deciding factor, although based on past experience, Visa may make the process more efficient, though its greed is unlikely to pass on any or much cost benefit to the users. So especially with the long delay in payments from Visa, I don't see how they've got much of a competitive advantage compared to Ripple, but let's see how this develops. Now, talking about anti-money laundering and crypto exchanges. So crypto exchanges are facing their biggest regulatory hurdle yet, and that also has a big influence on traders and investors, and you just find out why in a minute. So Bitcoin and its fellow cryptocurrencies have surged in popularity partly because they've offered a way to skirt government oversight exercised over traditional financial systems. I'm sure some people are concerned about government oversight, other people are not, but very often the regulations favor the rich and not the normal folk like us. So well, get ready to kiss much of that autonomy goodbye, and that's because of the Financial Action Task Force. On June the 21st of June, I think it's the 12th of June. The Financial Action Task Force, a multi-government effort that develops recommendations for combating money laundering and financing of terrorism, that's followed by about 200 countries, including the US, will publish a note. And this is important to clarify how participating nations should oversee virtual assets. And I think this is very, very important. Now, the new rules will apply to businesses working with tokens and cryptocurrencies such as exchanges, custodians, and crypto hedge funds. So that would be like Bitfinex, Binance, and so on. So they would have to participate in these new rules, which will apply to them. So much depends on how the rules long governing traditional bank wire transfers will be interpreted and applied by country-specific regulators. But they are one of the biggest threats of crypto today, says Eric Turner, the director of research at Crypto Researcher. And so this is, as we already know, the Bitcoin wild ride. The guidelines will require companies ranging from exchanges such as Coinbase, Kraken, to asset manager Fidelity Investments to collect information about customers initiating transactions over $1,000 or €1,000, as well as details about the recipients of the funds, and to send that data to the recipient servers provider along with each transaction. So everything above $1,000 or €1,000 would mean that if you're trading, you won't be able to trade on Binance anymore if without KYC. Because if you would be trading on Binance with amount more than $1,000 or €1,000 without KYC, then basically Binance will be not complying with these money laundering laws. So let's see how this plays out. So while it may sound simple, compliance will be very costly and technically difficult. So of course it's very difficult to track, and the exchanges have to be ready to share this information with regulators. And of course it's all dependent on where the exchange is. Some countries will are more independent and do not follow those rules. So here the Chief Compliance Officer John Roth at Seattle-based exchange Bitrex, which has about $58 million in daily trading volume. He says that it's going to be very technical, difficult to track this. Now, furthermore, it's either going to require a complete and fundamental restructuring of blockchain technology, or it's going to require a global parallel system to be sort of constructed among the 200 or so exchanges in the world. So if you've got different exchanges, that would have to more or less share the information of the customers trading on it to see if you've got how many funds you've got and so on. So I'm not too happy about this this development. So let's see. I'm not too happy about it, if I have to be honest. A handful of US exchanges are discussing how to set up such a system, says Mary Beth Buchanan, General Counsel at San Francisco-based Kraken. Without enhanced technology system, this is a case of trying to apply 20th century rules to 21st century technology. There's not a technological solution that would allow us to fully comply. So the end result would be that many crypto businesses will face increased compliance costs. Buchanan said some non-compliant businesses could be shut down. In my opinion, if I look at this whole thing, I think one area which will then continue exponential growth will be the decentralized exchanges, because then with the decentralized exchanges, people will be able to trade through peer-to-peer trading directly with another trader without the exchange being the middle person. And with a decentralized solution, this decentralized exchange won't really have the information about the traders and so on. So I wonder if decentralized exchanges also fall into this category of anti-money laundering. So of course US exchanges may also lose customers, as instead of going through an exchange or another virtual asset service, some may simply start trading with others directly to safeguard their privacy. So either with cash or maybe decentralized exchanges. And I'm sure the technology will develop even faster and more to allow us to just trade directly without third parties. But at the moment, we still need decentralized exchanges and so on to be able to find suitable sellers or buyers for specific cryptocurrencies. So I get why the FATF want to do this, Chief Compliance Officer at San Francisco-based Coinbase, the largest US crypto exchange. But applying bank regulations to this industry could drive more people to conduct person-to-person transactions. Just how soon these consequences start to hit home will depend on the individual agencies. Now, if a country doesn't comply with the FATF rules and is placed on its blacklist, it can essentially lose access to global financial systems. Now the question is if they need these financial systems. The proposed regulations could also impact many more than 500 crypto funds that have popped up in the past few years. After multiple meetings with the crypto industry, regulators likely know compliance will take time. So will it be a potential hardship? Certainly, at least initially. Chain analysis Spiro said, while it may be a hardship, it seems to be something that's necessary. The roadmap at the end of the day after this is less arduous for the industry. So yeah, I'm also very interested to see how this develops. In my opinion, like I just mentioned before, decentralized exchanges and more options for exchanging directly through peer-to-peer transactions. These methods are going to grow, and more decentralized exchanges basically are going to pop up. Now the question is, of course, if they also fall under this category, but I think we'll have to find out and see. So only time will tell. Now, so that was it for today. Hope you found this interesting, and I'll catch you on the next one. Have a great day, and see you soon. Bye bye.